are we going to need this today? Like, are we going to need to drink this for what you're going to tell us today? Or
Crack it open, Conrad.
I don't think people understand. I just was presenting to a large team the other day, and I said, guys, just when you thought it was safe to come out, our buddies at what is it?
OFSI.
OFSI come out. So just wait when you hear what Brian. A lot of you don't know what's happening down the pipe in terms of mortgages and things like that. So,
yeah, like OFSI is the one that sort of governs all the banks and the financial institutions. And normally when they start poking their head around into new rules and regulations, they like to get some feedback from it. So they ask for feedback on the rules that they want to implement in April. So 3 of them, the big 3, none of them are awesome. So get the Cabassier out there. Okay. So the first one we've talked about is the debt to income. So what they're talking about is they're saying 25% of a lender's portfolio would be able to exceed a 4.5 to 1 ratio of income. So what does that mean? If you make $100,000 a year, you can qualify for a $450,000 mortgage, right? That's going to be in addition to all the other requirements, right? So again, these are proposed guidelines. They're not set in stone, but normally they wouldn't propose them if they weren't thinking about implementing.
And raising the rate, the credit scores.
So yeah,
it's possible.
So on that one's interesting one. So which is one that I'm not a big fan of either, but they're talking about, so when there's debt service ratios, you can only afford so much of a mortgage. When someone puts down 20% and a mortgage is what we call uninsured, banks typically have the ability to make exceptions, right?
Yeah.
So if you have someone like Conrad who maybe declares $100,000 on his income taxes, but probably makes more than $100,000, maybe 120, maybe 110, right? But you get someone like that, great credit, and maybe they're putting down 25%. And maybe they have $1 million in assets elsewhere. A bank has the ability right now to say, we're not really worried about this loan. It exceeds our debt service requirements, but he's going to pay. So we can end up making a debt service exception. Typically, it's supposed to be 40, but we could say, it's 50% or 55. A lot of banks make this exception right now. What OFSI is saying is that we're going to eliminate that exception. Banks aren't allowed to make that exception anymore. So now, what does that mean? It doesn't mean these people can't buy houses, but it puts them into a different category of lender. And this is something that's just going to be outside of the bank's purview. If that comes into play, it's similar to if someone buys with 5% down, it's kind of like 42-39. There's no exception on debt service ratios because of the mortgage insurance companies. So that's the second one.
So the wealth management guys are going to be really hit on this one.
Yeah, they will be.
Yeah. And they're part of the bank. So if it's a wealth manager part of a bank, then they can't access the funds.
We're already seeing
wealth management has been doing this for a long, long time. They're very much a part of this whole ecosystem.
Yeah, what they would do, and this is something that we've seen a long time, they would claw back. They would do maybe 65% loan to value, 50% loan to value, and eliminate a lot of the other requirements, right? Because the loan to value or your equity position is really safe. So they're looking at eliminating that. So it'll affect a lot of people in that. And then the last one is the stress test, right? So, the stress test arguably has done a lot of good things for everybody right now because when people were getting a 2% mortgage rate, the stress test was 5.25. Well, now the rates have gone up. People theoretically can still afford it. So they're looking at tweaking the stress test and they're not going to make it any easier.
Yeah.
Right? They're going to make it, whether it's going to be for a refinance, different stress test, purchase, different stress test. And I think, we've seen over the years, lots of different mortgage rule changes. What you guys could be doing for your clients right now is just making sure that don't sit on the fence right now.